All right, so we've said in the last couple of lessons that cash doesn't impact when we actually report the revenue. In this lesson, we're going to rehash that. So we're going to go over it again, but specifically we're looking at cash. And so again, if you're watching this lesson, you might feel like we already covered it in the last two lessons. And for the most part, we have. I'm going to add just a little bit on things called deferred and accrued, which we'll also learn in another section. But I wanted to make sure that we really understand the impact of cash when it comes to accrued, accrual basis of accounting, and revenue. So just kind of putting that out there, making sure that you know that this lesson you might feel is familiar, which is good, right? More repetition in the material means that you get it better and better. So that's why we're doing that, okay? So let's go ahead and talk about the impact of cash when it comes to revenue recognition. Now, we know that accrual method, we are concerned in this course, we're concerned with the accrual method than we are with the cash method. So that's a fact that I've stated before. Now, under the revenue recognition principles for the accrual method, we're not concerned when cash is received. We don't care when cash is received. And then in the next lesson, we don't care when cash is paid. We care about when the revenue has been earned based on our 5-step process, okay? Now, we're more concerned whether or not a service or revenue was provided to the customers according to the performance obligations that we talked about in the last lesson. So that's our main goal there. Now, the accrual method, the way that I like to think about it is there's really 3 times that cash impacts or can impact a revenue situation. So I've got this timeline on your screen here, and let's assume that right in the middle is when an exchange actually happens. So when the exchange actually happens at that point, so that's that middle point. And so we've got some space before that point, and we've got space after that point. And so let's kind of think about the 3 different scenarios in which cash can actually occur in the revenue process. So the first one is that cash could be received before the revenue occurs, right? So cash is received, then we perform whatever obligation that we were going to perform later on. We're not saying that we perform it immediately after. So, you pay for your meal now, and then 15 minutes later you get your meal. No, we consider that the same time. But what we're talking about is you pay for something today, and then you might not get it for a week, 2 weeks, 3 weeks, okay, later on. Okay, so cash is received before the sale of the service is received. Typically, we think about deposits here. We call that deferred revenue. So just kind of introducing you to some terms here, that's deferred revenue. The reason why it's called deferred revenue is typically we would book the revenue today because we have the cash. But because we haven't done anything, we haven't earned it, we're going to defer the revenue. We're going to defer the reason why we're getting the cash until a later point in time. So when we receive cash up front for a service or product that we're going to perform later on, we call that deferred revenue. We're deferring the revenue to another point in time. Okay. The second scenario in which cash actually impacts the accrual method is actually when cash occurs with the sale or the service. So again, going to the fast food restaurant, you order, you pay, and then 15 minutes later, you've got your food. Now, some people would say, well, there is a delay, it's deferred revenue. Yeah, but we're talking about a very minimal amount of time when we talk about the full span of a year. So minimal amount of time, we're okay with that. Same thing with a grocery shop. You go to the grocery store, you exchange cash for groceries. That happens almost simultaneously there as well. So that is another instance in which cash can affect the revenue process. The last kind of scenario in which cash impacts the revenue process is if cash happens after the actual sale occurs. Okay, so cash is received after that sale or service occurs. We call that an accrued revenue. Now, what do we mean? We've actually already accrued the revenue. We just haven't been paid yet. Okay, so that's kind of what we think about there. We're accruing the revenue now. We've earned the revenue. We just haven't been paid yet, right? So we'll get paid at some point. So we will book the revenue, but then we'll book an accounts receivable instead of cash because we haven't received the cash. So That's the third scenario that cash can impact the revenue cycle. So when you look at the timeline here, cash can come before, cash can come at, and cash can come after. Now, when do we book the revenue? So this one we have to wait, right? So we have to wait here. This one we can book the revenue when we receive the cash. And then this one right here, we book the revenue over here when the exchange actually occurs. So again, thinking about how the accrual method works, when it comes to the revenue recognition principle, that's what happens, okay? So the last two, we book the revenue when they occur, even though the cash might not happen until later. The first one, we have to defer the revenue because we haven't provided the services or provided the product yet. We'll defer that revenue until we actually perform it. So when we do that, then we turn that deferred revenue into revenue. Okay, so that's how we look at it from that standpoint. So let me give you a couple of examples here. I'll walk you through them and you tell me when we're actually going to book the revenue. So the first example, in June, a customer connects with a salesperson who draws up a contract to provide services to the customer. In July, the customer pays $1,000 as an advance payment. So we have $1,000 coming into us in June, but we don't perform it until July. The question is, under what month should the company provide this? The company providing the service to the customer report the revenues. So we receive the money in June, but we won't report the revenues until when? July. Why? Because that's when we actually perform the service. We don't perform the service in June. Therefore, even though we receive the cash, we will still debit cash, credit deferred revenue. So we're going to credit deferred revenue because we haven't earned it. And then when the revenue happens, we will swap out the deferred revenue for revenue. So we'll debit deferred revenue, credit revenue. Okay? And if you didn't get all those journal entries, we'll go through those later on, but I want to give you a preview. Again, helping you understand it in a little bit, a preview, and then actually teaching it to you when we get to those sections. All right, next example here. In June, company X delivered 3 pallets of merchandise to company Y. So X delivered to Y 3 pallets of merchandise. Company Y has established credit terms with X and will be paying X in 30 days, which will be in July. So the question here, under what month should company X report the revenue? So company X provides the products to company Y in June, and then in July, company Y pays X. Therefore, when did the exchange happen? When did company X earn that revenue? They earned it when they delivered the pallets. They delivered the pallets in June, so we're going to book the revenue in June. So the journal entry for that might be a debit to accounts receivable and a credit to revenues or sales. And then when we receive the payment, we'll reverse out the accounts receivable by debiting cash because we'll receive cash and crediting accounts receivable to release company Y of the obligation of debt that they have with us, company X. Okay, so when do we report it? In June, when the exchange actually happens. All right, last example here. On June 30th, company A comes into the store and locates an item they were looking to purchase. Company A takes the item to the counter and pays with his credit card. The credit card company pays the company on July 2nd. Under what month should they report the revenue? So the exchange happens on June 30th. They are paid on July 2nd. In this case, when the exchange happens, would be in June. Therefore, we are going to book the revenues in June. Okay, so it doesn't matter if they paid in credit card. We'll get the cash a couple days later. We report it in the period in which the exchange occurs. So in this case, the exchange or the service, the product being provided is provided in June. So we're going to book that revenue in June. Okay, so that is take a look. That's a look at how in cash impacts the revenue recognition process. Again, it's important to know is we're really counting on what the performance obligation is and when do we complete the performance obligation. When we complete the performance obligation is when we book the revenue. In all 3 cases, we're looking at the exchange or when the service actually occurs, and then we book the revenues regardless of what happens to cash. Cash will come later, cash will come before. We don't care. We'll still accept the cash, right? So we'll still take the cash. We'll just deal with the revenue parts separately from the actual cash payments. Okay, so hope you enjoyed this lesson, and we will see you in the next video. Hey guys, it is Patrick. Don't forget to press the like button and share this video with someone who could get a lot of use from watching this lesson, like maybe a classmate or maybe a friend or maybe just a parent, just because you wanted to share this video because you're very excited about what you saw. Share it with someone. And if you want to help us grow and help us make sure that we put the very best in accounting topics out on YouTube, make sure you press the subscribe button and turn on that notification bell. That way you're alerted every time we post videos to this channel. Now, I do this with every one of my classes at the end of class. What did you learn from this lesson? Put that in the comment section below and I'll respond to you on what you got out of this video. So hope you enjoyed this video and we will see you in the next lesson.